Hey everyone, welcome back. So I don't know about you, but I have started to hear the R word or the recession word more often than before. I'm seeing recession mentioned in over 10 articles in just last 2 days. And we are seeing these lot of news media or a lot of news coverage that is covering recession as we are probably heading into recession, or recession is something that we have to watch out for. So I read some of these articles, and out of all the articles, there was just one article that made complete sense. It was an article that gave us a clear picture of what to expect if we get into recession. Because I'm sure, as myself, you guys also have lots of questions about what happens if we get into recession. What kind of stock market activity are we going to see? For example, companies like Apple, Amazon, Google, are they still the safe bet to invest in? Or are we think that everything is doomed and we should sell out? So without any delay, let me share what's in the report or what's in the article, and I will also share few charts which shows us the probability of recession, and at the end how media wants to keep us confused. So on my screen here, right here, as you can see, this article came out on CNBC Pro over here that says Goldman lowers official S&P 500 forecast and also evaluates what the recession would do to stocks. Now this particular article, let me actually change this. Yes. So this particular article was very interesting because not only it gave a clear picture of how S&P is going to trade lower and of course lower the expectation of 2022, but it also gave a percentage point or clear direction of if we get into recession, what to expect. And that's why I thought this was really cool. Okay, so let's start here. Goldman cuts its price target for S&P 500 over the weekend, saying higher rates will crimp stock valuation. The bank also considered what different economic scenarios would do to the overall market. Now, here's what they're saying. The bank lowered official S&P 500 target to 4,900 from 5,100 previously. The new forecast represents just a minuscule 2.8% price return from where the benchmark ended in 2021. So they're not counting all the sell-off we have had in January already. We are talking about how we ended in 2021. So the target is still 10% higher than Friday's close. So it's not that we are going up 2.8%. We are going up 2.8% since the close of business on December 31st. But we know what happened in January. In January, we saw some crazy sell-off where we are down almost 10 to 15%, and for some stocks over 50% just in the month of January. So they're saying that right now it will gain 2.8% since December of 2021. That is about 10% more from where we are right now because S&P has lost almost 6.8% in January. Okay, while our index EPS estimate remain unchanged, we adjust our valuation forecast following our economist revision to their path of interest rates. Okay, now they're saying that, of course, this is not the first time we are heading into recession, right? We have had recession many times in the past. This is very interesting. Pay attention to this. Okay, what a recession would mean for stocks. Goldman also considered 3 alternative macroeconomic scenarios, including a recession, which investors are increasingly asking about, according to the bank. So if we get into recession, pay attention to this now. Stocks would fall 24% from peak to through, as they usually do during economic contractions. The bank predicts that means S&P would fall another 18% from current levels to 3,600. If we get into recession, now on top they are saying we would end 2022 with 4,900, but over here they're saying if we get into recession, the S&P can go down to 3,600. Now, if recession doesn't happen, then inflation remains, Fed hikes more than expected, and S&P 500 would decline 12% to 3,900, the bank predicts. Okay, then the last one, inflation recedes, fewer Fed hikes, stock rally 24% from here with S&P hitting 5,500. So in these 3 scenarios, they are saying if recession is here, then we could see 24% drop in S&P 500, taking it all the way to 3,600. If inflation remains and Fed hike more interest rate, then we are going to see about a decline of 12% and S&P goes to 3,900. And then if inflation recedes or inflation disappears and fewer Fed hikes, maybe the Fed is only doing 3 hikes, which is highly unlikely, then stock rally 24% from here with S&P hitting 5,500. So in all these 3 scenarios, there is one scenario which looks more probable, and I'll tell you that, which is of course number 2 here, inflation remains and Fed hikes more than expected. This is the most possible outcome where we are right now. And I'm not just saying it, making a prediction here, but I'll show you some more stats. Okay, let's read this article and then I'll show you that stat. So there are not baseline scenarios from the bank, or these are not baseline scenarios for the bank. However, Goldman still believes the market will recover from here and post a small gain for the year. The S&P is down about 7% year to date. So Goldman is basically saying that S&P is going to gain a little bit from here and it's not going to go negative for 2022. Now I'm going to show you something else over here. Okay, so pay attention to this. This is a chart from Bloomberg that basically shows the real GDP growth right here, as you can see, and then also the estimate for 2022 and 2023. I want you to pay attention to the CPI data year over year right here. So they are expecting in 2022, we will end up at about 5.0% of CPI. That's year over year increase. Now we measured 7.5. Of course, we are expecting CPI inflation to recede or go down as we go into the second quarter, into the third quarter, and into the fourth quarter of 2022. That's why they're reading an average reading of about 5.0% for the year. Look, in 2023, we are going down to 2.5%. Which is, of course, a very, very welcoming number given that we were at 4.7 and 5.0 that they're estimating in 2021. We were at 4.7 and in 2022, we are at 5.0. So 2.5 is a great number in 2023. Okay, so what is the probability of recession? As per economists and strategists, it's not high. Look over here. Probability of recession, 15%. And I'm going to actually enlarge it right here. Probability of recession, 15%. And I'm going to enlarge a chart to kind of show you here. All right, so on this chart, this is a probability of recession. Back in 2000, so this was 216 when I took this screenshot, 216-2022. The probability of recession is 15.04%. Now, if you go back in 2020, the probability of recession was almost 100% because everything was stock market crashed, if you remember, in the March of 2020. And everybody was basically saying that we are going into recession now and very soon. And if you look at this chart, the probability of recession is very low right now. So even though we are seeing more and more people talk about recession and everybody is basically saying that recession could happen, the probability of recession right now is very low. Because again, up until Fed decides what they want to do, we are going to see these kind of claims or these kind of videos and articles will come out all the time. And that's why I wanted to make a video after releasing a video for CPI data, because it kind of makes sense to put 2 and 2 together. So the most probability is that we are going to see a very small rally in S&P 500 towards the end of 2022. It's not going to be 2020 over again. It's not going to be 2021 over again. 2022 will be a tough year. It will be a very volatile year for stocks. But I don't think we are going to get into recession where we stand right now. Now, of course, anything can happen and anything can change. That's why even the big economists and even the bigger bank are saying that, you know what, we can see the probability of recession happening, but nobody, of course, can say for sure. Because if inflation resides to 2.5 and if inflation comes out as 5.0% in 2022, it's not that bad as we had a change in 1.2 in 2020. And then look in 2021, we went up to 4.7. That was a big change. And housing stats, if you look over here, the kind of housing stats we had between 2020 and 2021, it's not the same number. And in 2023, everything is looking to get cheaper as the supply chain issues improves. And of course, COVID goes down and diminishes. So these are some interesting chart and of course, interesting predictions. Nobody knows, as I mentioned to you before in my previous videos, that nobody knows what the heck is going on in terms of what Fed would eventually do and how the market will react. Now, the question is that if we get into recession, or if let's say S&P goes down 10%, let's forget about 24%, if it goes down to 10%, what should you and I as investors do? Now, again, it's my opinion because unknowingly, I was investing in 2008 that we are in recession. I was too new for the stock market. I was too new in the stock market. And I was just starting my life. I had some money on the side and I wanted to invest in maybe buying a house or buying into stocks and investing in the stock market. So those were the two options I had in front of me. After seeing what had happened in the housing market, I was really scared to invest in real estate at that time. So what I did was I put my money into stock market. My first purchase started in 2008 and I continued to invest money slowly into the stock market. And I mentioned in my previous video that the portfolio, that one portfolio that I never touch, it's my long-term portfolio, has over 300% gain since then. since 2008. Now, I wouldn't have been able to sit here and tell you this if I was not investing at that time. So the whole reason why I'm saying this is because all these big companies like Amazon, Apple, Google, they're not going anywhere. They will be here even after the recession. They will be here if we hit recession, even during the recession, and they will continue to do what they do. So in my opinion, recession or stock sell-off, or if the Fed raises interest rate to, let's say, 8 times this year, and the sell-off we are going to see in S&P are nothing but huge opportunities for investors, for long-term investors. I'm not saying that you invest today and you can take your money out next year and you will make money. No, you might continue to see this bear market or this market for a very long time. But if you can continue investing in the markets today, then you are going to reap the benefits in the next 5 to 10 years. So that's, again, my opinion. And I know what I will be doing. I know I'll be buying more Tesla for any major weakness. I know I'll be buying more Amazon on any major weakness. I know I'll be buying more Apple, more Google, more Nvidia. These are some amazing companies. But I'm not rushing into it. I'm not buying it today or tomorrow. I'm taking my time and I'm seeing what the markets are doing. So I hope I provided some value. These are my thoughts, of course, my opinion, and I'm not a financial advisor. This is what I see in the market, and I bring you what I see in the market. So for more one-on-one conversation, consider joining our Discord and Patreon. Links are in the description. And if you like the video, then give it a thumbs up and consider subscribing. As always, a pleasure to share all of this with you. Until next time, you all have a sparkling day.